The MD of the company chatting with us live and exclusive first on ET. Now, Mr. Bangur, congratulations on a spectacular Q3 performance. First up, please help us understand how the volume growth trajectory has been and an understanding of the regional trends as well.
Volume growth has been fairly good. Instead of 53 lakh tons, this quarter it is close to 60 lakh tons. Year-on-year growth of about 11% is there. When you look at it, 11% overall, it seems good, but our growth has been far more better in East India, where the overall growth is also there. So 11% growth, though good, is almost in line with management expectation. Maybe the market was not expecting it.
Sir, this is Vivek joining in from the research team. So talk to us a little bit more about the Eastern India operations. Also, we want to understand from you, the regional utilization trends as well. We want to understand how the utilization panned out both in East as well as North India.
In East, our growth has been 34%, and in North, it is only 3%. But when you see the capacity utilization, in East, very strangely, even with 34% growth, our capacity utilization has come down because we have added new capacity. So, as we are continuously adding capacity utilization in absolute term is 77% in North and only 50% in East. In East, we have more capacity, and as the capacity has started this year only, so it will take time to mature. We have enough potential to grow in East.
Bangur, if we look at the previous quarter's performance, that is the Q2 performance, it was higher trade mix, which was leading the improvement. Could you give us a sense of how the trade and non-trade mix panned out in the third quarter?
Yes, I will. In third quarter, our capacity, December quarter, last year it was 71%, now it is 49% in East because of the new capacity. And if we see quarter on quarter, it was in East it was 81%, and now again and our trade and non-trade mix is that in East India we don't have any non-trade at all, so it is 100% trade. And in North India, again, as I was saying earlier, our non-trade portion is now limited. We are focusing more on trade, but it will not be wise to give the exact number.
So talk to us about the volume trends in the southern region in the quarter gone by. Also want to understand any kind of major ramp-up calls that you've seen in South India. We want to understand the kind of capex you've taken as far as South India is concerned.
In South India, we have stabilized our plant and put it on commercial production mode only on 25th of December. So till now our production was off and on, not stabilized, so just stabilized. So for South India we have just entered the market. About 40 to 50,000 tons or something like this has been sold in the first month, but that is irrelevant. Even in this quarter, January, March, it will not be very relevant as we are very new there. From April, June, South India numbers will be having meaningful commercial impact.
So can you help us with the annual capex guidance that you will be leaving us with, especially that you have a couple of new grinding facilities too that you have planned? And the other thing we want to understand is how has sand mining issue affected your operations in the last 2 quarters?
In the last 2 quarters, sand mining has not affected our operations meaningfully. It was a very big problem last year. But this year, fortunately, this has been well under control. This is one part. And secondly, you were saying about the capex. So this year, we are not starting anything new. We are just closing both our Orissa unit and Jharkhand unit. 2 grinding units will be completed. So roughly 1,000 to 1,200 crores will be our capital expenditure for the next year.
Right. All right. There's been a major volatility in the fuel prices also in the recent past, Mr. Bangur. How has the coal and petcoke mix changed post the kind of moves that we've seen with regard to crude oil prices?
This is a continuous thing. So whether crude oil also is part and parcel of the whole ecosystem. What I find that in October-December quarter, compared to July-September, our fuel prices went up a little. But now, in this quarter, January-March, it is expected to come down. And in the next year, first quarter, April-June, still it will be low. So we have seen the peak in the last quarter.
Last question, in fact, a couple of questions roll into one. The first one, sir, we want to understand how the demand environment is panning out across most of India, given the fact that you also have the election year coming up and most of the construction activity is expected to come to an halt. Apart from demand, the other thing which I want to ask you about, sir, is the price hikes. So we understand that there have been price hikes undertaken across most of the regions. But what we understand is that, most of the price hikes that were undertaken by the companies over the last year, they have been forced to roll it back. So in terms of demand and pricing, can you give us some guidance, sir?
You see, the prices are more or less very stable. For last 4 years, the profitability of companies is not increasing at all. In fact, it is decreasing. So even if a price rise of 2 to 3% annually is what we are seeing, a sporadical price rise of 5 rupees or 10 rupees, which the papers report, is one-sided report because you are the first to talk about the rollback. Otherwise, the impression is that the cement prices always go up only. So the prices go up by 3 to 4% per year. The inflation is little more. So the profitability is being affected continuously. This is one thing. The demand is good. Country is growing and growing at a 7.5% GDP. Cement demand is also increased to roughly 7% to 10%, 8% or so. 8% is the average all India demand growth. So we are happy about the demand growth. This is very healthy.
So Bangur, really appreciate you taking time out and chatting with us about what the company's quarter has been like and what is the way forward. Vivek, thanks as well for joining us.